Hello everyone. Today is the 7th of September 2025, and in today's video I'll be covering utilizing ranges. So this video, some of you have already seen it, but I remade it for purposes of just, I wanted to make it better. So what exactly is utilizing ranges, right? So let's call it ranges in general, all right? Many of you guys have recently seen or have seen via my trades or my recaps the strategy that I use, right, to refine ranges, right? This is the foundational thought process of that strategy. Now, is it everything? No, it's not everything, but it's a good chunk of it. Okay, it's going to go ahead and indicate exactly which ranges are going to be high probability and how to actually trade those ranges, right? It's something that many of you guys have been asking for and have asked questions already in the Discord, and I feel as if it's just right if I make a video for explaining it, right? So let's start off with some foundational information and concepts that you guys need to understand before watching this lesson. So power of three, significant highs and lows, days, quarterly theory, YouTube video, and the basics of ICT. Now, I do want to say, in terms of power of three, the reason why power of three is so important in this sequence is because you guys are going to be utilizing more than you guys think. Trust me. Trust me. You're going to be utilizing power of three way more than you think. Okay, and is that a good thing or a bad thing? Well, for me, it's a great thing, right? Because I already trade power of three in conjunction with quarterly theory. But power of three, not in the sense of like, okay, the 10-15 candle AMD. No, that's not at all how you're going to be trading this. You're going to give each candle a purpose, right? Of course, in a certain time window, right? When your trade should present, each candle should have a significant purpose. For me, every 15-minute candle has a substantial purpose for my entry, right? And you're going to dictate what that purpose is, and then you're going to enter off of each one, right? So, for example, if the 9:30 candle was to manipulate, the 9:45 candle might see a remanipulation of the high and then mitigate back down lower. Or 9:30 was to go ahead and create an expansion leg, and then 9:45 was to induce a high, manipulate lower, and then come back up higher after going ahead and manipulating lower into discount of the range. And I'm going to go over a perfect example in this video as well. Significant highs and lows, because not every single high and low you see in price is important. Significant highs and lows, as in which highs and lows you're going to be prioritizing, right? If you don't understand that, you're going to struggle with this, because this basically gives you which ones are going to be higher probability than the other ones. But of course, like sequential S&T, previous session, previous day high and lows, those are all important highs and lows that you guys should be referencing, right? Days QT YouTube video, because he explains AMDX in that video, and that's a very, very important concept within this strategy as well. And the basics of ICT, as in PD arrays, structure, all that stuff. So you guys should already have a full understanding of all the four topics that are already here, right? So ranges, right? The basics of ranges, right? How do we use it? Every ICT trader uses ranges as a reference point in price, whether it be daily, weekly, or intraday ranges such as Asia, London, New York. We all use them to identify premium and discount. Unraveling each layer, you find yourself using ranges subconsciously to identify valid PDAs. Now, a lot of you guys say, oh, hey, I don't trade ranges. You do. If you trade ICT, you trade ranges, period. There's no neglecting it. There's no running from it. You're rating a previous dealing range, and you're going to discount a premium of the current one. Or you're referencing the current expansion leg, or the current range that you currently have in the market, and then you're going discount and then coming back up higher. Now, of course, again, questions to ask yourselves to see if you actually, or to prove that you actually use ranges. Do you buy or sell every single fair value gap you see? No. Do you go ahead and prioritize every single order block you see, even if we're expanding up 300 points? Are you gonna take the first bullish order block? No, you're not. Right? Ranges gives you a reference on when to expect price to again distribute, when to distribute, which PDRAs to go ahead and prioritize in the entire range, so on and so forth. So ranges are a key component, if not the entire component. And to be quite frank, the PDRA matrix is an entire range, right? If you go to both extremes of the PDRA matrix, premium and discount, that the first and the last from top to bottom, the first is old high, and the last is old low. Congrats, you don't have a range, right? So utilizing that logic, you're then going to identify how to go ahead and incorporate ranges within your trading. Many of you guys struggle with this, and really it's not that hard. To be completely honest with you, it's really, really simple. Simply by just utilizing what you guys already know about ICT and putting into specific time windows and price that actually produce a proper range, right? The same way that ICT mentions that you don't take every single fair value gap, you have to look for the proper one. The same goes with ranges. You don't take every single range into account, you have to look at the proper one, right? The importance. Now, the current usage of ranges is wrong. Why do I say that? Because a lot of people, and this is not mainly for QT traders, because QT traders naturally, if you learn through day, you prioritize certain ranges by themselves, whether it be previous quarter range, previous day, previous week, whatever, so on and so forth. You prioritize those ranges already, right? That's foundational when it comes to quarterly, right? So if you trade QT, this doesn't really apply to you. But if you trade ICT and just blend ICT and that's it, you're gonna struggle, because this is a key component of how you're doing it wrong. A lot of you guys, I see it because I see you guys trade, or I see in public, in public eye, people saying, "Oh, we hit EQ of this range," and then they're like, "Oh no, but like I don't know when to enter a trade." I see a lot of people, and I used to struggle from this prior as well. Is they'll pull an entire leg, right? A random ass leg. Let's say like a 930 to 930 to 936, right? That's the high of the range. The same way that time has restrictions, right? The same way that QT puts or boundaries on time, meaning quarters, right? That same logic of putting boundaries should apply into your ranges the same way it applies to PDRAs, right? You don't value every single range the same way you don't value every single PDRA that you see in price, right? Or in that case, every breaker block or every OB or every fair value gap is going to work, but they don't, right? There's certain ones that are worth more than others, right? So why is it wrong? Let me explain it. Refinement exists in every single PDRA. Lower time frame imbalance in an OB, optimal trade entry within a breaker. If refinement can be used for every ICT concept that he's taught, why can't that same logic be instilled with ranges, right? Especially acknowledging the fact that the PDRA matrix in itself explains a range that delivers old high, old low, rejection, order block, continue on, or liquidity void, all that stuff. That in itself is a range. So if we can then find the best range possible, right? The highest probability range that price is going to reference, how do we do so? And I want to explain this in layman's terms, because I see a lot of people trade optimal trade entry, right? A lot of you guys. And is that a bad thing? No. But a lot of you guys send DMs, or a lot of you guys question yourself saying, why is this OTE not being mitigated? Why are we just bouncing off, like, not even equal? We're bouncing off this random part right here in price, and we're not even seeing OTE. Like, why is OTE not being seen at all in price? Well, that can happen because of two things. One, you have the wrong range. Period. You have the wrong area in price to look at. And that can really, a lot of you guys may not believe it, but that can completely ruin a trade idea. If you have the wrong range, right? Let's say, for example, the overnight range. Okay, cool. From London low or Asia low to, I don't know, 130 high, right? That's not the ideal way you're supposed to be using ranges, right? So if you pull an OTE from that range, unless there's something important like sequential SMT supporting it, or it's the first expansion after a previously delivering from a previous day sequential, then that OTE is probably not going to work. And by not work, I mean you're probably not going to see it get mitigated, one, or two, it's just not going to hit, or it's going to fail completely, right? So it's just not going to work. So this is the basics of ranges, right? We're going to follow up with the next slide, which is the principles of it, right? This is going to be, how can I say this? Not difficult for most of you guys to understand, because if you trade power of 3, this should be somewhat self-explanatory, right? This is just going to help you guys a lot to understand how price actually delivers, right? Each candle is meant to trade into a range or to create a range that will be mitigated after. Now, when I say that, I do not mean, let me clarify something really quickly. I do not mean, oh, this 1 minute candle is going to be referenced in the next week. No. Since price is fractal, if you have a microcycle sequential SMT, again, pay very close attention here. If you have a microcycle sequential SMT, and then you have a 15-minute distribution candle or PRC or PSP, that range is going to be seen later on. Did price take out, or did price mitigate a range prior? Yeah, it did, creating a microcycle sequential SMT. But it also created one in the distribution back up, or in the PSP, right? So that exact same concept, and a lot of you guys know the name for that, is going to be implemented here. This is the foundation of that concept, okay? Monthly, weekly, daily, 4-hour, and so on, all work on the same principle, right? Using the fractal mindset behind price, you open up a whole new world within your trading, right? Now, view here, open, low, high, close, right? OLHC, right? The basics, or OHLC, right? A lot of you guys know this concept, taught by ICT, and also taught by a bunch of other people as well, who go into a little bit more detail from it. Open, low, high, close, open, high, low, close, right? All these different, or the two possible ways that candles can deliver, right? The principles of this stuff. Now, this is going to be referenced, okay, very soon. And I want you guys to pay attention to this image right here. This candle translated to a line chart. This line chart is going to be referenced in the next few slides. So here it is, power of 3 with ranges, right? This is the most important slide in this whole video. If there's one thing I want you guys to retain, it's this. Nothing else but this. Okay, this is the only slide that I find, or that I give importance to in this entire video, if I had to. Okay, because this is the foundation of what I do. Okay, for those of you guys who are confused still, this is it. For a range to be confirmed, it needs to be sealed. There are a few exceptions for this logic. Okay, now, what do I mean for a range to be confirmed, it needs to be sealed? So, what pisses me off a lot, and I see this happen very frequently, I see people get open, low, high, close, right? And they'll include this into the range. That's the most common mistake that I see people make, and that is the most lethal one that I've seen people make as well. That's not how this shit works, okay? Again, that's not how this shit works. You're you're prioritizing a certain range, okay? So let's say there's pay very close attention here. Let's say there's microcycle sequential SMT at these lows down here, right? And we hold this is a 15-minute candle, by the way. We hold a distribution here. This is a 15-minute distribution candle, okay? You are not supposed to include the new high that's made into the range. This is the range. This is the range. Because I have a question. This is simply just going to help you guys understand the thought process behind this. If I were to include OTE from here to here, okay, am I inducing anything? Have I traded outside of the range to confirm it? No. So what the fuck am I doing? You're not supposed to include the inducement before the manipulation. You're not supposed to. Which is why it's so important to have that thought process of certain candles have certain priorities, right? So in this case, microcycle sequential SMT, 15-minute distribution candle. This 15-minute distribution candle closes. The open of this candle should mitigate the high, manipulate down into OTE of this previous 15-minute candle's range, and then form a buy program. And if OTE lines up with a true open, you got yourself a great trade. I just explained a model to you guys that I trade. New candle, as mentioned here in the bullet points, I'm going to read it off. New candle should take the higher low of the previous candle's range to then mitigate premium and discount to then host its buy or sell program. In this case, I gave a bullish example. Microcycle sequential SMT at the lows. You have your distribution candle. This is the previous candle low, previous candle high. We induce longs, faking people who think that we're going to go up higher. Then we manipulate lower, inducing or faking people who want to go short, right? Or who are going short, saying that, oh, we're going to see a new low. In reality, we're doing a deep retracement to the previous 15-minute candle's range to then host a buy program back up to buy side. Now, an example of this would be as such, right? Notice how ES raids the 9 a.m. candle's low. The 9 a.m. candle's low, by the way, guys, is the one with the arrow, right? This little arrow that's right here that's pointing upwards. That's the 9 a.m. candle's low, right? Notice how ES raids the 9 a.m. candle's low whilst NQ fails to raid the low and creates relative equal lows. As you can see, NQ creates relative equal lows at the lows, right? Fails to mitigate the 9 a.m. candle's low. When this happens, you should expect a deeper retracement into discount on, or premium in this case, into premium on the asset class that does not raid the low, right? Now, NQ fails to raid the low and creates relative equal lows. ES has raided the previous range low whilst NQ has not. Then NQ retraces harder into OTE of the 9 a.m. candle, and because it failed to mitigate the low and presents a short opportunity after mitigating the optimal trade entry as mentioned, right? So it's fairly simple concept to understand. This is just the hourly time frame to give you guys an idea of how this looks like, right? Now, here is a different chart. Now, here I have the S&P, the NASDAQ, and the Dow. Notice here, at the lows, I have marked out an optimal trade entry. Now, this OTE, why is it important, you may ask? I'll answer the question for you. The reason why this OTE is important is because it's supported by sequential SMT. Now, I'm on the 15-minute time frame. Now, for those of you guys who already know how I trade, right? You guys know exactly what this OTE is, and you guys know exactly what time frame I pull this OTE from. Is this the OTE of the entire distribution from Thursday to Friday? No, it's not. Why? Guess what? If that was the case, if I was to use the OTE from Thursday to Friday on every single asset class, YM would have mitigated EQ of the range. Actually, it would have mitigated OTE of that range. And it would have showed, oh, we're actually bullish because YM hit OTE. No, you're not. You're not bullish. Price is nowhere near bullish. Right? Having narrative and structure in the back of your mind, because that's the priority that you should be having within the market. Narrative and structure. If not, nothing's going to work. This OT that I pulled here is from a 4-hour time frame created by daily cycle hidden at the lows, right? A 10 a.m. distribution candle. Every asset class forms a distribution candle, so you graph out that range. That is the range you're going to be referencing, okay? And then notice how price trades to the OTE on NQ, to the OTE on YM, past the OTE on ES, and hits equilibrium and bounces perfectly on NQ, right? It's not that hard to understand, guys. It's a really simple concept, okay? It really is not that hard. Now, before I ask the question, Halo, Why is it that we rated the low on NQ, or sorry, rate the low on ES and on NQ? Bullish or bearish tendencies. Simple. Bullish or bearish tendencies. NQ has a good short opportunity. Now, are you going to expect OT to get hit on every asset class? No, it needs to make sense. So what happens? Well, okay, let's say OT gets hit on ES, or I can drag, take profit, or I can probably trim some. Or I can say, well, NQ is not hit equilibrium. That's very weird. It should hit equilibrium, at least sync up with ES. So when ES takes out the previous day's low, or the low of Thursday's AM session, okay, if that's the case, then I can probably expect ES to do what exactly? You can expect NQ to tap equilibrium while ES takes out sell side, creating weekly cycle sequential SMT, which is exactly what happened today. Or sorry, Friday. It's not that hard to understand, right? It's a very simple concept. Again, it's not difficult. And here's a better example of this being utilized for a bearish example. This was the trade that I took on Friday, short. Ended up hitting for a 8R. Kind of pissed off because I could have got way more out of that, to be honest with you, but I didn't. I want you guys to notice something within this chart, okay? Something very, very, very nice, in my opinion. I like it a lot. Microcycle hidden sequential SMT at the highs Q1, Q2. NQ doesn't close, ES closes above, YM closes above. They all take the high, right? But NQ doesn't close above. So microcycle hidden sequential SMT. Followed by a distribution of the 930 candle. The 930 candle hosts a distribution lower. Now, what did I say about the thought process of sealing a range? What do you want to see price do? Seal a range. So, right at 945, it's kind of right here. What does ES do? ES takes the previous 15-minute candle's low, the previous 930 15-minute candle. That 930 candle takes out that low. Then what does ES do? Shoots right back up. And yes, I said the asset class that doesn't take the low to then retrace back up will probably make a deeper retracement. As you can see, we obviously traded past OTE on NQ. But then what did we form at the highs? Doubling microcycle. ES takes out the previous Q2's high in Q3, while YM and NQ fail to do so. And then we form a sell model that then delivers this entire move down. Why did this work? ES sealed the range by taking out the previous 930 candle's 15-minute low. Sorry, the 930 candle's low. Came back up, created microcycle hidden, and then distributed lower. Now, I got asked, hey, why didn't you enter right at the top of the OTE? We just took out sell side on ES. I'm expecting a deeper retracement on NQ. I don't expect this high to get mitigated, but I still want to wait for confirmation. What's a confirmation for me? In this case, it would probably be it'd be doubling at the highs. And I mentioned that. I wanted to see microcycle doubling at the highs before delivering. A few people were on a call with me and I mentioned it to them. So, microcycle Q1, Q2, Q2, Q3, right? This is very obvious to form. When I saw the 930 candle drop, I mentioned I would like to see microcycle doubling form at the highs and then deliver lower. And that's exactly what we had. Microcycle Q1 get mitigated in Q2. Does not close above the high on NQ. Then ES takes out Q2's high in Q3 and we sell off. That's all it is. That plain and simple. It's not that hard to understand. Okay, guys. It really isn't that hard. Now, if there's any questions, comments, or concerns, feel free to ask me in the chat or ask me via DM. I'll gladly answer it for you guys. For those of you who are still confused, little summary. The ranges you're going to be utilizing are going to be supported by sequential SMT. The only, and this is the only exception that I have for this, okay? I want to make it very clear. The only exception I have, which by the way, it has to have a really good delivery on every asset class. The only exception I have is the weekly range. That's the only exception I have. I look at the weekly range as a reference. But if price is skewed and YM is nowhere near EQ and NQ and ES are doing their own thing, I use this exact same model. And do me a favor, some homework for you guys. Take a look at the highs, the previous highs that we had, the all-time highs on NQ. I want you guys to graph out the Thursday candle of that week. Look at the height of that candle, and then look at the Thursday candle, and graph out the OTE, and tell me what you guys saw price do when we tapped it. All right? I'll see you guys later. Stay safe. Much love. Peace out.